25 years in the financial business, and what I learned over this time, Bitcoin, real estate that stores value, and then business. And I used to have so much more, and it was a distraction, and it was a ton to manage, and now I'm like, I've simplified drastically.
Yeah. I have even changed the words I use, and I often say that I don't invest, I save. So I save into real estate, I save into Bitcoin. And just by using different words, it gives me this different mindset, because most people think it's something that has to be done very actively.
I look at creating content and intellectual property as my main driver, because I look at the three main assets that create cash flow: businesses, real estate, and intellectual property. The more I can create a business that doesn't rely on me day to day, that means it's more intellectual property that can do some of the work and train people around it, the more freedom I have. I've built so many amazing relationships because of my content. It's the relationship capital that comes with it as well, because if someone engages in your content or my content and we meet, we get to skip a lot of time. Like, they already feel like they know me. I love that asset class, but it requires people to face their insecurities, be more vulnerable, really dive deep into certain things so that they can be of true value and develop a skill.
It's the power of having content, right?
Yeah.
Intellectual property. It's the power of having what I think is the law of attraction, which is not sitting in a room chanting to yourself that good things will come, but do I have a compelling vision? Am I able to tell it in a good story? And do I have a big enough megaphone for people to hear it?
What have been your best megaphones?
The best megaphone, so the interesting story about that, and going backwards, after 2008, I got wiped out. I had to get restarted. I had nothing. One of my friends owned a mortgage company, and he said, hey, I know you know internet stuff. If you can generate leads for me, I'll share the revenue with me. And I was like, okay. I didn't know anything about that, but I knew internet stuff. So I started doing lead gen. So I spent, 8 years doing lead gen for financial service companies, and that was all paid ads. So that was the megaphone, paying for it, right? I had no list. I didn't know anything about that, so I built up a landing page for mortgage. I started a Google pay-per-click campaign, and my megaphone was Facebook ads and Google ads and things like that. What happened with the crypto thing is then I started selling the crypto newsletter through paid ads, because that's what I knew. And in December of 2017, Facebook and Google banned all advertising. So now my megaphone's gone. And so then we went on to YouTube, and then it just became organic content. And now obviously the organic, YouTube has been the best.
How often do you post?
I started the channel in 2018 when we got banned and we had to start a channel. In 2020, I had 35,000 subscribers. Since 2020, we've added 550,000 subscribers and done about 60 million views. Just on that one channel. I have another channel as well, but 60 million views on that one channel. Yeah. And that's been over the years, there's been between 1 to 2 videos a week. Mostly I've tried to stick with 2 videos a week. Sometimes I've dropped down to 1 video a week, only because
travel, a lot of things going on.
Mostly because I'm like trying to build something out. You know, you got to hunker down for a little bit. It typically takes me, the production level has gotten a lot more intense. Yeah. So it's typically going to be about 4 or 5 hours of my time to get a video ready before we record it, before it goes into editing, post, all of that. So sometimes I'm just busy and I need to hunker down, build out a new program, something like we just did here. Yeah. Yeah.
And so YouTube, big platform to use other social media platforms as much, or?
The problem that I've found, and most people will tell you, like, you should focus on one platform. Like, get one going first before you build out the others. Yeah. And I just always focused on YouTube, and that was all I focused on. I've since tried to start getting other platforms going, and I have a team that helps me do that. The problem is that, like, I've been trying to do some on my own. So like I focused on Twitter for a while, and I was taking my videos and then breaking the videos down into like Twitter threads, right? And things like that. And it worked really well. And we added, 150,000 subs over on Twitter. Then I started focusing on Instagram. So then I started, okay, let's take the videos, chop them up, put them on Instagram. We got to about 250,000 subs on Instagram. But like, I can't keep all of it going at the same time. So really I'm good at about 1.5.
For me, it's all been books, really.
It's been books.
I haven't done much on I'm starting to do stuff on the social side.
Yeah. I mean, the books is another one. I wrote a book as well, and that was, I write so much, right? So like I'm writing for videos all the time. And I write 8,000 word reports like regularly. I I haven't written books as long as yours, but the book that's a whole nother beast.
Yeah.
That's a whole nother beast. So it's like, how many things can you be good at one time?
Yeah.
The key is like, how can I create the vision and what Gary Vee calls like pillar content? And then can I have people create content off of my content? And that's what I've been trying to get to. And just recently I joined this mastermind, maybe about a month or 2 months ago, maybe, from this guy, Matt Gray. And he's like a content guy. And he helped me reframe my brain to think about, you're not building a personal brand. You're building a personal media company. Mm-hmm. And it's just a little bit of semantics, but instead of like each piece of content has to be from me personally, it's like, no, it's a media company that's built around my brand.
Right.
And when I think about it that way, then it sort of like lets me like, let go and let other people create content off of my content. So everything is me. I come up with the idea, with the vision. I write the content. I wrote the 8,000 page or 8,000 words, but can someone take a snippet and make new content from that under my media company? So I've been trying to do that, but it ain't easy.
I mean, what was life like before you built the YouTube channel or the initial newsletter? I mean, because it's just, I look at all the, like, we're in a relationship because I wrote a book and because you have a massive YouTube channel.
Yeah.
Someone's like, you two need to know each other.
Yeah. Someone asked me on this live event that we just did, hey, Mark, how is it that you went from being mentored by Robert Kiyosaki by books to now being friends with them? What were the strategic steps you did to do that? I want to be able to do that too. And I'm like, there's no strategy for that. It happened organically. But ultimately what I said, which is how you and I got to be friends, is that you have to create something of value, something that person wants.
Yep.
And when you build really cool things, it attracts a lot of people.
And if you keep it to yourself, no one knows what you have to give. So like the way I met Kiyosaki is he just straight up stole my content. I wrote Killing Sacred Cows, the 9 financial myths. He wrote Shooting Sacred Cows, the 8 financial lies.
Oh, shoot.
And so I just sent him a cease and desist, but at the same time, I just sent another letter saying, I don't really want to cease and desist. I just have to protect my IP. We should just collaborate. And they promoted me 3 times.
Yeah.
And they were just like, one of his guys was like, yeah, we just took your book and we liked it and used it.
So if you build cool things, if you do cool things, it's kind of like advice that some of the dating people would give to men. Be the type of guy that a good girl wants.
Yeah.
Like that's how it starts. So if you want to be friends with a Garrett or a Kiyosaki or whoever, be the type of person that they'd want to be friends with. And so I told the guy, I said, there's no way to strategically do that. It has to kind of happen organically. You have to become that person. I have to build something cool. And if you build a big event, or a cool company or a cool product, like people want that. Like you could start like Heart and Soil, right? Like they started that company. It's like all like meat-based products and things like that. It's a really cool company. Like I like those products. And Paul Saladino started that company.
Yep.
And I have this brand. I talk about fitness a little bit. It's not really my brand. They want to give me products. Next thing you know, they want to invite me in to the parties, and now I'm hanging out with those people, and I'll promote their products because I also like their products. And it's like they like me, I like them. Like let's work together. But you have to build something cool, like a company like Heart and Soil, or like a platform like I have, and that's how it happens. And it's interesting because when I was writing the crypto newsletter, when it was all paid, Jacob and I were invited, my partner at the time, were invited to this, I'm not going to name him, but a big real estate.
Which Jacob did kind of bring us together too.
Yeah, he brought us together.
Multiple people, but he was one of the ones.
But there was this guy in Phoenix, Arizona, and if anybody knows in the real estate niche, this guy's like a big real estate coach there. And actually, there's a bunch in Phoenix. But anyway, this guy brought us in. He's like, hey, I want to get into this crypto niche, and I'm thinking about launching this crypto offer, and I want to bring you guys in, and we'll all be partners, and blah, blah, blah. And he was just name dropping like everybody in the industry. And I remember like being like totally amazed by this. And I'm like, how does he know? How does he know all these people? Like, I don't understand it. Like, they all know each other somehow? But, after then doing it for a while, and then you go to events and you travel, and the next thing you know, like, everybody too, right? I mean, your network is amazing.
And it comes down to like embracing intellectual property, which I think is this hidden asset class.
Yeah.
Like there's a lot of people that could create intellectual property that don't think of it. Like for example, someone might have an amazing business that helps their clients out, but they could actually help their industry out. Like I license what would the Rockefellers do to financial advisors. I just got to the point where I was tired of seeing everybody using it and not paying me.
Right.
And I was like, well, I'll just give them an opportunity to pay me.
And
make it better for them. Yeah.
By licensing out.
So I gave them a lot more tools and things like that, but that's a B2B play instead of just to the consumer. So I'm still selling books to, everybody, but I'm also now licensing those books to financial advisors who are selling them, because I want it more impact, more reach.
Is that because there's like two different skill sets? So like on one hand, you'd almost think, well, like any business owner has some sort of information that they could sell if they knew how to package it up as IP. But not everybody's capable of doing that.
That's true, because most financial people are pretty good one-on-one, but they don't have the one-to-many skill set. They don't want to be on a stage. They don't love doing webinars. The majority of them, they just like being across from a client. I like to be across from a client a couple times a month for a full day, but I don't want to be in meetings, 5 hours a day, 6 hours, 7 hours a day, just one after another. That's not, I want to write. I want to have a lot more leverage and impact, and the books can do that. So yeah, I'm better at understanding how to create content that's one-to-many, so they can just utilize that, because you know what it takes. You wrote your first book, you're writing another book. It takes work. I mean, it's not easy. Yeah. And especially for someone who's never done it before, understanding all the different things of publishing, co-publishing, self-publishing, how you get the distribution, how you EPUB and have an ebook, and how you get I've been around, so I just know how to do those things, but I didn't at first. Yeah. And it was intimidating.
So do you think creating IP is not for everybody, or do you think everybody has something to package up?
Everybody needs to consider IP for their business, because the first consideration is IP for marketing, sales, and fulfillment. What are the things they can do to create more efficiency for their customer experience? I mean, because you create a lot of IP in your customer experience, right? When someone hires you and works with you, right? And that makes it where you're not answering this, like, you hate answering certain questions because you're like, dude, I've answered that question 1,000 times. Yeah. That's what the IP process is there, is to smooth that out so that you're getting, like, I want my intellectual property to do some heavy lifting so that when I'm with someone, I can get to the deep, like the intimate things that they have never talked about and the things that are most important, not the problems with the 401k. Yeah. Like, I want that kind of handled through the intellectual property so that we can get to real breakthrough. Yeah.
The funny thing about what you just said is after 2008, after selling multiple businesses and real estate, and then I got wiped out in the crash, then I started subscribing to financial newsletters, Agora, Stansberry, et cetera, because I need to figure out this market. So then I became a consumer of financial newsletters for a decade or whatever it was. In 2015, when I started buying Bitcoin, and then I started getting into crypto, I just started talking about it to a couple of friends and family that I thought would be interested. But word started kind of spreading a little bit fast, and I was answering the same question over and over, exactly what you said. Yep. So I answered the same question over and over and over, and I've been an internet guy. So I'm like, I'm just going to write this down, or I'm going to record this video, and I'm just going to keep sharing it with people because I don't want to answer the same question over and over. And then like, well, what are you buying? What other crypto assets? And I was like, here's an Excel spreadsheet. I'll just put it online for you to share. And I started the newsletter with no intention of ever doing it. I just didn't want to answer the same question over and over. And so I automatically created IP for that, and that became the newsletter.
That's awesome. And what I look at is I want the questions to be answered. I mean, if someone reads my books, they're so much more informed about what's possible. But I also want to not just answer the frequently asked questions. I want to train them on better ways of thinking of money and asking better questions. So if they were to read Money Unmasked, they have a different viewpoint. They start asking better questions that lead to more wealth for them.
So read the book first.
Right? Like, I love if they read the book or listen to it. Like, I make sure to, all I care is they engage with it. I don't care whether they get the ebook, the physical book. I don't care if they find the PDF on Google and print it out. Someone was saying they were doing that today. I saw in one of my ads. Or if they listen, but I just want them to connect with the content, because consumption leads to conversion. They're going to be like, okay, what's next? I look at it like a thermometer of like 0 to 10. If someone doesn't know who you are or I am, it's a 0. We have a lot of work to do to get them to a 10. Right. If they get a chance to watch your YouTube videos and they can spend a ton of time with you, even though you've spent no time with them, right? Now they're a 10. If they talk to someone on your team, they just have to take the order. Yeah. If they're a 5, they have to do the extra 5 to get them to that 10 of confidence. Right. And then using intellectual property for the customer service journey and experience to create longevity, to create additional value. And a lot of that gets created from the experience they have, the questions they have, the insights that they come up with. I mean, and I think that everything from there is collaboration. We have a lot of collaboration you and I are doing, because you know things that I don't know, and I know things that you don't know that help in that customer journey. So we're collaborating so that they get better results.
So you're like a renowned financial expert. I mean, you built a company helping thousands, I don't know, tens of thousands of people with finances, building wealth, building businesses, selling wealth, taxes, tax optimization, investing strategies, all these things. But when I'm talking to you, it sounds like you're focused more on the business side than the investing side. So if you think about like your own wealth engine, how much time would you say is spent on creating wealth, maybe on business stuff, IP, books, coaching, versus how much time are you actually spent actively like managing the money side?
Man, it's so different than when I was in my 20s. It got to the point where 2/3 of my time was managing the investments in money because I didn't have any parameters. I was just like, I want to own as much real estate as possible. So I had over 100 properties. You know, I'm going to do oil and gas because that's tax efficient and other people are doing that. I'm going to do these IPOs because there's upside potential.
Yeah.
I'm going to start a hard money lending fund because then I can get points on the front. I'm just doing all this, and then all the things I really enjoyed are being pushed aside because now all my meetings are with bankers for financing properties, attorneys for doing all the documentation and the entity structuring, you know, like property managers. And I just found myself being like bored and not enjoying it. So now I look at creating content and intellectual property as my main driver because I look at the three main assets that create cash flow: businesses, real estate, and intellectual property. I don't love real estate. My philosophy on real estate is own unique properties that I can enjoy, but they're not cash flowing. They're just appreciating in value to help battle inflation. So it's a store value asset.
Right.
And I now don't want to own more than that I have because I already feel like I own, 2 cabins and a house, and it's like, and they're all big and they require a lot of effort. So I don't want to hire more help for that. Business, the more I can create a business that doesn't rely on me day to day, that means it's more intellectual property that can do some of the work and train people around it, the more freedom I have. And I had that. I had a business that was just kicking off 7 figures that I did one webinar and some videos once a month.
Yeah.
But it was boring.
Yeah.
So now I'm like, how do I fall in love? I love writing the books. I love teaching at your event. I love, being able to connect with people. So I'm really finally open up to social media because in the past I was like, I don't want to do that. I had 400,000 people in my database. I didn't care about social media.
Right.
But now I'm like, no, I can connect with tons of people I would never connect with and create content on a regular basis and be more public about it, which actually helps me book speaking and actually talk with people back and forth. Like I actually respond some of the time because I don't have 580,000. I know you guys just have people that manage the spam alone, But so I spend way more time I look at every book I wrote as a piece of real estate.
Yeah.
And I look at I have a book that came out in 2008 that's still, it's number 1 on Amazon right now in financial risk and management. It's number 4 in retirement planning because I'm still putting the effort behind that.
So then I love that you said the books like real estate. I've been talking about, I haven't really gone deep into this because it's not really what I'm trying to do, but each YouTube video, I've been calling it a video estate. So I pulled up some of my videos and one of my videos is 18 months. I posted 18 months ago and it's averaged $600 a month for me for the last 18 months. One video.
That's amazing.
Yeah. I have
Just
another
kicking
video
off
I
cash
posted
flow.
9 months ago and it's averaged $1,000 a month for 9 months.
Dude, think of how hard it is to buy real estate and get $1,000 a month.
Yeah. Right. And so I just put up a video with no cost and it's making me this one, like I said, $600 a month over 18 months.
And it's building your media empire.
So it's
building your
almost
brand.
like a video. So each, and some make $25 a month, $50 a month.
Sure.
But each one's like a video estate, right? I think about that. But anyway, going back to this as this finance professional that helps people with that.
Yeah.
And then you've kind of explained how you do it on your own. Then would your advice to most people be, forget all the complex investment strategies, focus on your business, which is your highest leverage of making wealth, and then just save it in a few core things?
Totally. I mean, in the core things, I think you and I agree on.
Yeah. So is that Warren Buffett said, if new investors came in with a 20-card punch ticket, I think, and all they had was 20 moves their entire career, 20 buys or sells, that they would outperform everybody.
Yeah.
Is it something like that?
So here's an interesting thing. Someone said, Warren Buffett's not into Bitcoin. I'm like, here, I could tell you why. Warren has this one philosophy.
Deal box.
I buy companies that are public companies and run my methodology through it.
Yeah.
So when people think he's a stock market investor, he's not a stock market investor at all. He just has enough cash to acquire a company.
He said,
and put his methodology.
He said, I don't buy stocks. I buy companies.
Exactly.
They just happen to be public.
That's the whole thing. It's just a different game. But yeah, like I'm looking at like Bitcoin, real estate that stores value, and then business. And I used to have so much more, and it was a distraction, and it was a ton to manage. And now I'm like, I've simplified drastically.
Yeah.
25 years in the financial business, and what I learned over this time is simplification makes all the difference in the world. It's just like, you know, I wish that you and I would have talked about things we talked about today 5, 6, 7 years ago, so I didn't buy shit coins.
Right.
You know?
Yeah.
Because I was like, well, there's something to this, but I still got derailed by thinking, well, this one has more potential for upside because it's a smaller price point instead of just looking at Bitcoin as a standard. So, you know, like that's just like people get distracted with all these, you know, crypto that won't exist in the future instead of the thing that they can count on, because we get greedy, because we get misinformed, because we buy false stories, and there's so much out there. Like, I just know, unfortunately, most of the world would be better off just doing a lot less than they're doing, because they waste a lot of time. When I was buying real estate that was outside of my expertise, because I'm like, well, I'll just partner and they're going to do the work, but then they go bankrupt. I now own the real estate. I'm doing all the work. And it just took me away from the things I do best. But I learned some major lessons through that. Like, I was really helpful with clients after that once I went through all that in real estate.
Yeah, I was telling the story at this event when I sold my first business, and I got this big check, and like this business ran on its own, but I'd been fed this lie that I needed passive income. And so I needed to sell the business, even though I didn't have to work there, and threw off tons of cash flow, and it was very risk-free because I knew everything about it. But I thought that I needed to sell that and then go buy a bunch of real estate because that'd be passive. I put $600,000 in a partnership of a 200-unit apartment building in Atlanta, Georgia, in a terrible location that needed a ton of work, with a partner that I didn't even barely know. And let's just say it turned out horribly wrong.
Yep.
Horribly wrong. So I went from a low-risk, high-income business, but I believed I needed to sell it to go passive. And next thing you know, I'm flying back and forth across the country all the time. I'm dealing with partners that I don't even know or like. I'm getting ripped off lots of money. Now I'm in lawsuits. I mean, it was just terrible.
Right.
It was terrible. So
yeah, simplicity is, I mean, it's the key. And when I say simple, I don't mean like simple-minded. I mean investor DNA.
Right.
What are your values? What are your competencies? What drives you? And focus instead of diversify. People diversify. They get into so many things. Maybe this will work, maybe that won't work, that they're actually inviting risk by having more things that can go wrong.
Right.
Instead of narrowing it down and being like, no, I have expertise, because risk isn't, you know, this statement, it's not in the investment, it's in the investor.
Right.
Right? So you got to become a better investor. And part of that is not having so many streams of income that you can't pay attention to your streams. And then when one dries up, the others get neglected.
Right.
Right?
It's like the Warren Buffett, put all your eggs in one basket and just
watch the hell out of that basket, right? Like a hawk.
Yeah, I think that's interesting. You know, I have even changed the words I use, and I often say that I don't invest, I save. So I save into real estate. I save into Bitcoin. And just by using different words, it gives me this different mindset, because most people think it's something that has to be done very actively. Yeah. But it doesn't need to be actively. Actively is in my business. I'm very active in my business. But investing is something done not passively, but it's a savings, right? It's a boring thing. And I just think that most people, maybe it's Wall Street, maybe it's Ray Dalio with his 27 category all-weather fund or whatever. People think they need to do all these things.
He's got annihilated, by the way,
for the last several years. He's been completely annihilated. His fund hasn't worked since 2008. He's had $70 billion in redemptions. So it doesn't work. But I think people think they need...
Thank God he has intellectual property to save him.
He has intellectual property. So intellectual property seems to be the holy grail.
It's this hidden asset that most people don't recognize. I mean, even real estate has property tax, and dependent upon location, you and I can live wherever we want with our intellectual property, and we only pay tax upon the sale of our intellectual property. So if it's being stored, we're not paying tax on it, and it's infinitely leverageable and scalable compared to anything else, and it comes with these huge benefits. I've built so many amazing relationships because of my content.
Yeah.
By the way, you'd be proud. There was some Bitcoin conference someone sent me where someone's like, you need to read books and get financial literacy. Read Killing Sacred Cows, for Christ's sake.
Oh, no way.
At a Bitcoin conference. And they sent me the video. I was super,
funny.
I thought it was super cool. But the reality is, like, it's the relationship capital that comes with it as well. Because if someone engages in your content or my content and we meet, we get to skip a lot of time.
Yeah.
Like they already feel like they know me. We already have some common ground to talk.
Yeah.
And it's so easy to be referred. Someone can send your video to someone. I mean, I've got tons of friends that didn't know we're friends that are like, dude, you need to check out this channel. It's your channel. And then, you know, you could just hand my book to anyone very quickly, or I can hand it to anyone very quickly, or they can grab it on Audible, and all of a sudden we can build a relationship. So I love that asset class, but it requires people to face their insecurities, be more vulnerable, really dive deep into certain things so that they can be of true value and develop a skill. I wasn't a good writer when I wrote Killing Sacred Cows. I'm a good writer now. Yeah. And I just rewrote the book. I'm on my 4th version of it. It's called 2.0, but I wrote a self-published version. Then I wrote the first published, a second, and then this third one's my own. And it's improved. But like, how cool is it that I'm still getting checks on Killing Sacred Cows, 2008 till today? Yeah. That's a good asset.
Yeah, that's a great asset.
Rockefeller's great asset.
So I have, I create a lot of, I guess, what you would call IP. I create content that makes money. I mean, I talked about the YouTube videos.
I love that you call it in, like the way you described a YouTube video that's kicking off at $600 a month. That's amazing.
Yeah, it's amazing, right? And I create courses that I sell and things like that. But that's all, I guess, IP that I use myself. Then you take it to the next level of then licensing out the IP.
Yep.
So like, what's the step for that?
So what happened was, What Rockefellers was a book that I wrote with my co-author, and I was like, cool, I'm going to put you on stages, because I was traveling a lot, and his kids were now out of the house, and he's really good at what he does. So I was like, I'll put you on the stages, we'll write the book, I'll do most of the writing, you'll do most of the math, and that's where we'll come together. And it was, it did okay the first year, nothing big. And then all of a sudden, financial advisors discovered it. And at first, I put it up for sale on Amazon for $1,000.
Oh, wow.
Because I didn't want anyone to buy the book from Amazon. I wanted to buy it from me. Yeah. And I didn't want financial advisors buying it because it was something I was generating leads for Michael for. Mm-hmm. And then eventually Amazon just pushes your price down. Oh. And then people started to buy it in quantities of 100 and 200. And it was these financial people. Wow. And I knew because they'd start asking me if I'd be on their podcast, and they'd talk about the book, and people are mentioning, like Patrick Bet-David's mentioning what would the Rockefellers do, and all these people. And I was like, wow. And I just started seeing the Rockefeller method everywhere, and they've gotten so much more traction on it than me in some ways, because they were really smart about it. But I was like, well, why don't I just make it where I've now tested this to be amazing at getting people to engage. And so I can just have someone write the foreword for the book if I approve of their philosophy, and then I can put all the links to point to them, and now they've got their name on the cover with me and Michael. They can hand that book out, and all the links will help them build, and then they get my legacy builder tools, they get all the articles I've written, because now they can use intellectual property to actually engage with their clients.
I like that. I'm not really sure how that applies, but I could think about other people in my niche that I might already be creating content for that might want to use my content, and then allowing them to use it.
Just like that firm that was like, hey, we like your trading thing. We think we could blow it up at Black Friday. Yeah. It's just, and look, when someone first told me about licensing, it was an attorney, Denise, and she was like, you should be licensing your stuff. And I was like, it's like 2010. I was like, and then I talked to this guy, Joe Stolte. He's like, dude, your content's the most requested for on the financial side for daily.ai. I was like, really? And so I just was hearing all that. And so I hired Roy Williams at the Wizard Academy, and I just spent a day with him. I'm like, I think I should create more intellectual property and license it. So in 2012, I created a company to do that. Still didn't really know what I was doing, but I was just taking the steps. And then eventually just started doing licensing deals with a few firms. But I was charging like 15% of everything that was coming in from the content I was creating and driving leads for them. And I'm like, I might as well start teaching other financial people to do it that subscribe to this philosophy.
Now, tell me about that piece. Maybe we'll transition to that because I create a lot of content. My content creates a lot of revenue. I have an entire, most of my staff is on the content side of that business, right? Is that something I should consider spinning off and turn into a production company, or maybe another company that holds the IP?
Yes.
And then
both.
I mean, so I have like the content side, so we create the content, and that generates revenue through sponsorships or AdSense and things like that. And then that generates leads that go into like the coaching consulting business. I mean, should those be like different entities, and then the information flows back? So one side produces, one side holds the IP, the other side licenses it for the coaching or something like that?
Yeah, so I have I'll just tell you my format, and you can borrow whatever's helpful for you. I have Ripwater, which is my intellectual property company.
Okay.
I have Wealth Labs, which is my consulting company. So it's like I'm one-on-one twice a month with people. They pay $30,000 to come spend a day with me. That's Wealth Labs. So if Wealth Labs takes an income, or if someone hires me to speak, it's Wealth Labs. It's an S corp. It has to pay 15% of everything to use the intellectual property from Ripwater.
Okay.
But Ripwater also is getting paid when there's other people licensing my content. It's always getting a percentage of any content that's out there as the intellectual property company, which also means when I sold my other company, I kept and retained the intellectual property.
Right.
So they bought, some of the videos that I didn't care about anymore, and they bought the database and the brand. But I still own Killing Sacred Cows. I still own What Would the Rockefellers Do?
Yeah.
I still own Money on Mass. I still own the things that I thought were most current and relevant, so I could create what I wanted, not what they were wanting.
Is that the production company too? The IP and the production?
IP and production company. And then that also got me a deal where now I'm a publisher, so I have a distributor that takes 10%. But usually when I was, going through publishers, they're taking like half. So now I'm only getting 10% taken, and they deal with Amazon, and they get distribution when we print in quantity. And so now I have that because of the IP company. So it opens up these doors.
Would that make sense if my consulting company is the only client of my production?
That's how I started.
Okay.
I just, Wealth Labs was the only client. Then Wealth Factory became a client. Then Guard is another firm. They became a client. And then now all of a sudden, even my early mentors, two of my early mentors are now licensees, which is amazing because 20 years ago, they taught me.
Yeah.
And so now I've got, I just barely launched, so I probably have like a dozen licensees.
Yeah. And
so I'm not taking a percentage. I charge, 25 to 35 grand up front, depending on the size of the organization. And I charge $1,000 or $2,500 a month, depending on the amount of support that we give them, because a lot of them aren't good on the tech side for all this distribution to happen.
Yeah.
And then I just teach monthly marketing to them. And then, I give them a lot of resources and go high level that they could tap into.
Yeah.
Yeah.
Great. Well, that's a world of information.
Awesome,
I love it. I love the world of IP. I got into it reluctantly, meaning I was kind of forced into it. I love it now. It's changed my life. I'd recommend it for anybody if they think they have the chops for it. You've definitely been an inspiration for me as well. So check out Garrett Gunderson. We'll link his stuff down below. We'll sign it off.
Awesome. Thanks, man.